Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
For today's session, I'll be taking you through some principles of accounts, multiple choice questions. And guess what? Just as your paper two, those essay type questions, your multiple choice questions are just as important. So you would want to score I on your paper one. And we begin with the first question. Employees of a business are entitled to annual profit sharing bonus of 20%. Profit for the year was 10,000 before tax and bonus. If tax is to be 30%, what is the amount for bonus? So based on this question, you would need to take out your tax first before you can give the employees any bonus. Okay, so we'd have to ascertain what is the tax first. And based on the question, 30% of the profit is what the business would pay for tax. And 30% of 10,000 would give us 3,000. So tax is 3,000. It means that after paying out the tax, the business is left with $7,000. That would be the 10,000 profit minus the tax of 3,000. And that 7,000 now is the profit on which you're going to calculate 20% to give the employees that bonus, that profit sharing bonus. And that a value of $1,400. So the bonus to be paid out to employees is $1,400. That is the 7,000 that is remaining after paying the 30% tax. You calculate 20% of that and you get 1,400. Next question. Control accounts are kept as so as to assist management in, and this is looking at the purpose of the control account, or you could say benefits of preparing a control account, or it could have been referred to as an advantage of preparing control accounts. And the best response there is locating errors. Number 3, Mr. Morris purchases 1,000 worth of furniture for office use and entered it in the journal as purchases. Or will this error affect his balance sheet? So the furniture, which is an asset that was purchased, that was recorded in the purchases account. It means that that account would have been overstated, and the profit there, because the purchases is overstated, this is going to cause a reduction in the profits. No, the fact that it was not recorded in the fixed asset account, which is the furniture, that value would also decrease. There would be an understated value in the fixed asset account. So we're looking at what is the effect on the balance sheet. And on the balance sheet, in your balance sheet, we have fixed asset that is affected and we have the net profit that is affected. But what is the effect? The fixed asset, because it is undercast, the value would be decreased. For the net profit, because the purchases was overstated, this results in an understated value for profit. So therefore, the profit would have been decreased. So our response there is fixed assets and net profit will be decreased by 1,000. Number 4, an invoice is a document made out when goods are sold. It is made out. Remember, the invoice is a source document that is used for credit purchases and credit sales. If it is that it is made out, it means that the business is sending out this invoice. So it would have been sent out if sales were made. So D is our response. Item 5 refers to the following information, and from the information above, what will be the cost of goods sold? So you'd have to pick up the information relating to you calculating cost of goods sold. And what we have presented in the question is the carriage inwards of 125. We have the purchases of 4,520. So we're going to add those two together. And then we're going to subtract our closing stock of 900. And that gives us a result of $3,745 for that response. We're going to look at question 6. And question 6 read, item 6 refers to the following information. What is the stock at the end of January? So you're presented with opening stock, purchases during the month, cost of goods sold for the period. And because you have your cost of goods sold, all you're going to do is to use that knowledge in ascertaining your cost of goods sold, and then you solve for the missing item. The missing item would have been your closing stock, right? So you're going to add your opening stock to your purchases. You'll get 1,700, and the difference between the 1,700 and the cost of goods sold figure would give you a value of $300. So our closing stock is $300. Number 7, which of the following is entered in the purchases account of a grocery? Meaning, our purchases account is used to record goods purchased for sale, for resale. So what they want you to indicate is what would you record in your purchases account? What is the purchases account used for? And our response is A, goods for sale. Number 8, the following deductions are made from salary of an employee. Income tax 35%, national housing 2%, education tax 1%. And you're asked, what is the total amount which should be deducted from the employee's salary of $1,800 per month? So what you'll be doing is showing your calculation. And remember, when you go in exam, you can always write on the paper. So in calculating the income tax, that would be 35% of the $1,800, which is a salary. In calculating your national housing, that would be 2% of the 1,800 salary, and the education tax would be 1% of the 1,800 salary. And then your results for your income tax, that would be 630. Your national housing is 36, and your education tax, there is $18 after calculating. And to get your total deduction, you'd add all those figures together, 630 plus 36 plus 18, and that would give you a value of $684. So it means that the total deduction for the month for that employee is $684. Number 9, under which of the following conditions would the trial balance still balance? So we're looking out for those errors that will not affect the trial balance. It will still be balanced if any of these errors occur. So here we go. A transaction was completely left out. No record would have been in the book, so therefore the trial balance would still be balanced. Both a debit and credit entry were overstated by the same amount, so each will compensate for the other. One will compensate for the other, so both sides affected their trial balance will still be balanced. A debit entry was left out, and because it is only one, it means that the trial balance would not be balanced because only the left side is affected. Both a debit and credit entry were understated by the same amount. Again, compensatory there, so therefore the trial balance would still be balanced. So our response would be 1, 2, and 4, and that will be B. Number 10, the purpose of an appropriation account is to, and based on the response there for number 10, that would be B. Show how the net profit is distributed in a partnership or cooperative. Number 11, a businessman bought a new typewriter for $6,000. He paid $4,000 in cash and traded in his old typewriter. So the old typewriter is used to cover the difference of that 6,000 minus the 4,000. What is the entry to record this transaction? The new typewriter that was purchased, would cause an increase in the account. So therefore, that is an asset that will be debited. The old typewriter was used that went out of the business. That's a reduction in the asset, and that should be credited. And the cash, which is a reduction in the asset as well, should be credited. So our response there is A. And we move into question 12. What are the two most frequently used methods of calculating provision for depreciation? And those are the straight line method and the reducing balance method. Number 13, the excess of income over the expenditure of a non-profit making organization is called a surplus. So our response there is D. And we move into question 14. Which of the following states the correct order of the stages in the accounting cycle? And remember, there are 6 stages. We have source document, moving into journalizing, where you will be recorded in your different books of original entry. From that, now you'll post to your ledgers using the double entry principle of debiting and crediting. In that stage as well, you would proceed to balance off the account. Then you use those balance to take you to the next step in preparing your trial balance. After doing your trial balance, you would then move into your adjustments and closing entries. That's the next step. And your final step is to do your final accounts. And this is where you do your income statement, your balance sheet, etc. So based on that, our response would be journalizing, posting to ledger, trial balance, and then final accounts. So our response is A. Number 15, a trader draws up a trial balance in order to, or response there is to test the arithmetic accuracy of double entry postings. Number 16, in which book would a trader enter the writing off of a bad debt of a bankrupt customer? And the response there would be B, general journal. The sales journal is used to record credit sales. Returns journal is used to record if it is returned inwards, it's returned to the business by its customers. If it's returned outwards, goods returned by the business to its suppliers. And the purchases journal is used to record credit purchases. So our response there is B. Which of the following would not be considered part of the prime cost of manufactured goods? And remember, prime cost is a total of all the direct costs. Office managers' wages, this would not be a part of the prime cost because it has to deal with administrative expenses, and that is a part of preparing your profit and loss account of the manufacturing firm, or you could refer to it as the income statement of the manufacturing firm. So our response is A. Credit notes issued for goods returned by a customer will be entered firstly in the returns inwards journal. Number 19, the maximum capital a company can issue to the public is referred to as the authorized capital. So don't forget that your authorized capital is the maximum amount of capital that a company can issue. A standing order of $25 for insurance appears in the debit column of the bank statement. This amount does not appear in the cash book. How is this item treated in order to update the cash book? Standing order are payments agreements made between the account holder and the bank to make payments on his or her behalf. So that would cause a reduction in the bank account. So in updating your cash book, you're going to credit that to the bank account with $25. So your response there is C. A suspense account was opened for an error of $30 found in the trial balance. Later, it was observed that sales were understated by $30, meaning you have entered less than the amount. This item would be corrected in the journal by So we're looking at how you will correct this understated value in the sales account. And this would be to debit your suspense and credit sales. Because it was understated, you're going to put that value that is short on the original side of the account in order to increase it. Goods were purchased from M. Smith on credit for $2,400, but posted to N. Smith's account. The item would be corrected in the journal as follows. So we need to take the amount out of N. Smith account and place it in M. Smith. In fact, this type of error is referred to as error of commission. So what you do is to take the entry out of the incorrect account by placing the entry on the opposite side to cancel out that. And because goods were purchased on credit, it means that a credit entry was made to N. Smith. So to correct the error, we're going to debit N. Smith and we're going to put the correct entry in M. Smith's account by crediting. So our response there is D. Number 23. You're presented with capital for 4 partners. W, X, Y, and Z are partners sharing profits and losses in proportion to their capital. The capital of each is shown in the table above. What is Z's share of the profit of 7,200? And if they're using the capital contributed to share the profit, remember the formula is partners capital divided by total capital in order to get the profit sharing ratio. And then your result is multiplied by the profit, the share of profit there, which would have been 7,200 in this case. So for Z, that partner capital is $300. We're going to divide that by the total capital of 900. So basically that is 1/3 of the profit of 7,200. And the result that you get would therefore be D, which is 2,400. So our result for that one is 2,400, which is D. We're now going to move into question number 24. How should the totals of discount allowed and discount received columns be posted when the cash book is ruled off? All you need to know is that discount allowed is an expense. And because it is an expense, in posting to the account, you're going to debit because that is an expense. And the discount received is a revenue. And revenues carry credit balances. So therefore, you're going to credit your discount received account. So our response there is A. Debit discount allowed, credit discount received. And we're going to move into question number 25. Which of the following is a book of original entry and is also part of the general ledger? Now, the response there is A. When it basically the cash book is seen as an extension of the ledger. Why? Because you can complete double entry in your cash book. Remember, you have a debit side and you have a credit side, the receipt side and the payment side. So therefore, double entry is being completed in that book. Because double entry is completed in that book, we can safely say that it is a part of the general ledger. Number 26. At the start of the financial year, a trader has creditors of 3,200. He paid cash of 14,900 to them during the year. At the end of the year, the balance of his debt was 2,800. What was the trader's total credit purchases for the year? And tell you what, the concept that you're going to use to respond to this is your control account knowledge. So that is the concept that you're going to use to respond to this question. And because it is looking at creditors, it means that we're going to use the creditors control account, right? Now, remember, it carries a credit balance. The normal balance is a credit balance. And we're going to begin by entering our opening balance of 3,200. So balance brought down 3,200, right? He paid cash of 14,900. Because this is a payment, it's going to cause a reduction in the account. So we're going to debit that value. And that is cash of 14,900. Other information presented to us is that at the end of the year, the balance of his debt was 2,800, meaning that there is a credit balance in the account. Because we have to get that credit balance, the balance brought down on the credit side, it means that we're going to debit the balance carried down. So all you're doing is refreshing your memory there on control accounts. And those are the three figures that were presented to us. On this side, you have a total of 17,700. And on the credit side, we only have 3,200. So in order for us to get the total of 17,700, we have to find the difference between the two sides. The 3,200 from that would give us the amount that would go to our purchases. And that is the value of goods purchased on credit for the period by the business. And when you minus 3,200 from 17,700, you have a value of 14,500. So our response there is $14,500. So don't forget that it's your control account knowledge that you would use. They could have presented you with the information relating to that of a debtor and ask you to ascertain the value of sales for the period. Yes, you would use your debtors control account, or you could refer to it as your sales control account, sales ledger control account. Number 27 refers to the following information. And from the information above, the cost of goods manufactured is, so they asked me to ascertain the cost of goods manufactured. Now, in order to calculate your cost of goods manufactured, it would have been your manufacturing account knowledge that you're using. We have opening stock of raw materials, so that we're going to add our purchases. We less our closing stock of raw material. And don't forget that when you're doing your manufacturing account, the only figures that you would minus are your closing stock figures, whether it is closing stock of raw material, your closing stock of work in progress. Those would have been subtracted, as well as if there is any return outwards of raw materials. So you subtract your 1,000 for the closing stock of raw material. You would then add your direct cost, which is your direct labor, and then that would give you a prime cost. You add your factory overheads. Yes, you add your expenses when you're doing your manufacturing account, because you need to find out what is the value, what is the cost that the business incurred in order to manufacture that amount of goods. You add your opening work in progress, and then you would subtract your closing work in progress, and then that would give you a figure of $8,000. So your response there is $8,000. We are moving into question 28. POC as a manufacturing business is raw materials cost 1,900, rent and rates total 2,000, and factory wages amounted to 2,500. The number of units produced is 640, and you are asked to ascertain the value to produce 1 unit. Now, in order to calculate this, remember, you would divide the cost of goods produced by the number of units produced. And based on calculation, Based on calculation, 1900 added to 2000 plus that 25 give us a total of 6400. You would divide that 6400 by 640, and then you would get the result of $10. So our response there is $10, and that is C. So remember, total cost to produce the items divided by the number of units give you the cost per unit. Number 29, which of the following transactions should be debited in the cash account? So we're looking for the transaction that caused an increase in the cash account, a transaction that resulted in a receipt of cash. So our response would be C, which is sold goods for cash. So the goods that you have sold, you would have received the cash in return for that, in exchange for it. So therefore, that would be an increase in the cash account and thus debited. Number 30, a proprietor withdraws cash from his business for his own use. The entries are, remember, once the proprietor withdraw items, cash or any other asset from the business for personal use, your drawings account would be debited, and whatever is taken from the business would then be credited. So our response there is C for number 30. Number 31 refers to the following figures taken from a manufacturing account. What is the cost of raw material consumed? So for this question, you're presented with prime cost, you're presented with your manufacturing overheads, manufacturing overheads, you're presented with manufacturing wages. How do you get prime cost? It is your cost of raw material consumed plus your other direct costs. So in this case, the factory overhead is not needed. We're going to work with the prime cost figure and the manufacturing wages figure. So in order for you to get your prime cost, this manufacturing wages would have to be added to your raw material consumed or used in order to get the prime cost. So we're going to find the difference between the two figures, and that will give us a value of 7,950. So our response there is 7,950. Number 32. A company purchased 1,500 worth of paint and was told that if the amount was paid within 10 days, it would only have to pay $1,350. In other words, it received so it wanted to calculate the discount or indicate what is it that the company received by just paying $1,350. Now, if it is that the company paid $1,350, it means that there is a difference of 150, which is 1,500 minus 1,350 would give you $150. Now, this 150, what is it? It is a discount. There is a discount of 150. The fact is, we need to ascertain what value of discount is it. Okay? And because the person paid within the 10 days, this would be a cash discount. So without even calculating, we know that our response is A, because there's nothing else there with cash discount. But in order to determine the actual value of the discount, you would pick up the figure that the person should have paid, which is the 1,500, multiply that by X percent, because that is unknown, and then that would give you the value of the discount, which is the 150, right? This 150 now is then divided by 1,500. So this 150 is divided by 1,500. And then whatever you get, you're going to multiply that by 100 to get the result. So therefore, our discount there is 10%. So our response, as indicated earlier, it was clear cut that it is A, because based on elimination, because the individual paid within the 10 days, and they pay less than what they should have paid, there and then you know it is a cash discount, because cash discount is used to encourage prompt payment. That's the only response with cash discount. So we know it is 10%. But what if you get a question and there are more than one response with cash discount? Then of course you'd have to know how to ascertain the discount rate. Okay, now we're going to move into another question, which is question 33. And it reads, when a company declares a dividend of 15%, the dividend warrant sent to the shareholder owning $1,500 ordinary share is, so that would be the 15% of the 1,500 share capital, and that would give us $225 as our response. Number 34, which of the following accounts shows how profits and losses are shared among partners? And that is clear cut, the appropriation account. Number 35, on January 1st, a firm's capital is 4,600. On December 31st of the same year, the following information was provided. Drawings, 850, total assets, 10,000, loan outstanding, 950, creditors, 4,000. What was the net profit that year? So basically, you have to use your balance sheet knowledge, right? And that is assets. Remember, we use the format asset minus liabilities equal to capital. And this would be the closing capital. Now, we need to determine what would be the closing capital. And that is the total assets of 10,000 minus the liabilities of 950, which is the loan outstanding, and minus the 4,000, which represent the creditors. And that would give us a value of $5,050, right? So that is the closing capital. That's the value that the business should balance with, that 550. Now that we have that 550, we can then determine what is the net profit. But in doing that, we have to use our finance by section knowledge, and that is the capital. So the formula is capital plus net profit minus drawings, and that would give us closing capital. And remember, our closing capital was already ascertained, which is $5,050. Now that we have that formula generated there, we can pick up our figures. So our opening capital there would be 4,600. To that we would add X, because the net profit is unknown, and we would subtract the drawings of 850, and that would give us the closing capital, which is known of 5,050. And what you'll do now is to solve for X. So 4,600 minus the 850, and whatever you get, you're going to take it across to subtract that from the 5,050, and then your result would be $1,300. So our response is $1,300, which is B. Remember, what you use to respond to this question would be your balance sheet knowledge. Now, number 36, which of the following is not a nominal account? Remember, we have personal accounts, which are accounts for your debtors and your creditors, your trade receivables and your trade payables. We have real accounts, which are the assets of the firm, and we have nominal accounts. So the other things would go to nominal, such as your expenses, your revenues, your capital, etc. Those would go to your nominal account. So from the question, carriage inwards is an expense, so therefore that is nominal. Commission, the same. Furniture is an asset. Discount allowed is a nominal account because it is an expense. So therefore, our response there is C. And furniture there is a real account. Number 37, a credit balance brought forward in the sales ledger control account represents an overpayment by information that we put in the sales ledger control relates to our debtors. So therefore, B is our response. So that represents an overpayment by debtors. A retailer purchases goods worth $3,000. He receives 30% trade discount and 5% cash discount. What did he pay? So upon making that purchase, a trade discount was given, and the order in taking out the discount is that you'd have to take out your trade discount and then you take out your cash discount. So it is 3,000 times a trade discount of 30%, and that would give you $900, right? So that is a trade discount. Let me put D beside that, trade discount. And after taking out the trade discount, the value that was owing by the retailer would be 2,100. Now, of that 2,100, a cash discount is applied. So 2,100 times the 5% cash discount would give us $105. So what would the person pay? It would be 2,100 minus that 105, and that would give us $1,995. So our response for number 38 is A, which is $1,995. So that takes us to the end of this session on multiple choice. Stay tuned as we look at more paper 1 questions.
Like, share, and don't forget to subscribe.